Well, hey everybody, it's Friday night. And the beautiful thing about the stock market is that it has an open time and a closing time and a days of operation. And as soon as you're done for the day, especially when you're trading stock options, you're done. You're done until they open up on Monday morning. So it's a great time to take a look at everything. I'm going to discuss enhancements to the stock option straddle trading algorithm. So that's really what's going on. But we'll do this in a podcast form. So if you're tired of looking at the screen, you don't have to look at the screen. Just listen up and I'll explain what's going on. So investing in the stock market, there are many different ways to do it. You can do the Warren Buffett approach, which is finding highly valued companies when they're on a downturn, or when things aren't looking good, and everyone thinks it's doom and gloom. Come in and buy the stuff that has real value. Warren's really good at that. But there's a more active way to invest in the market using stock options, because you get a huge multiple on the change in the stock price. You get 100 times multiple basically when you purchase stock options. And I've talked somewhat about how they work, but what I want to discuss in this video is I now have a one numbered ranking system so that when we refresh the information for the day and update the current bid and ask prices for the stock options at certain strike prices for certain companies, when we do that, it rolls everything together and it calculates this number over here. And this number needs to be as close to zero as possible. Like this 5 right here is really good. That means Twilio is probably a really good company to try to straddle with stock options, straddle their strike price. That is what this number means. Really look like here's a 3. AbbVie. This is a 3, and I'll explain why this number is so low. It means it's a really good company to do this with. And what you're doing is you are anticipating enough of a fluctuation in the strike price to cover the cost of both a call and a put option. Meaning you pick a price for the stock, and the way options work is it's $1 for every penny they move in your direction when you have an option that's in the money, whether it be the call that's wanting the stock to go up or a put that's wanting the stock to go down. And finding valuable options that are inexpensive relative to how far we think they're going to move based on their share price and their movement today. Doing that gives you this great look at who you should do this with. And the algorithm is picking them off and hitting almost all of these companies. And so we're going to discuss today and discuss what's on here and what it would say to do. For example, it does say Twilio. The 1 week option that expires next week is apparently about $260 some total if you buy both of them right now. They moved $2.30 today. That's almost all the way there. They're only a $50 share stock, but this number is still 5%. That's really good. It means they'll probably fluctuate more than $2.60, $2.70 or whatever in one direction at some point between now and next Friday. That would make sense that happens. And so you're going to make money by selling one of those options for more than $266 when they move at some point next week. That's what that means. So what else do we have on here? The 3%er, AbbVie. So the reason why this shows up here and this number is really good at 3% is for the 1 week option, they have a share price of $145. I'm going to double check this option because I bought one today. I'll tell you how much I spent, I think, in a second. I bought, I bought a call and a put here because I saw this and I was like, wow, this is really good value. It says $267, 145 plus 120-ish. Yeah, $265-ish. You can get this for. Now, they only moved $1.67 today, and they're not generally a big mover, which is why this option price is so low. It's only saying a $2.67 change is what you need. They got 62% of the way there today if you'd bought one before they opened today. But at this higher share price, and a very good spread range on the options. Like they're highly traded, I guess, the stock. I hadn't really heard of them, but I think they're a biotech company. So this is really, really good. It means that in order for you to not make money next week buying this option, this company, right now they're at 145.11. They have to stay between the range of, let's call it $3 away from 145. So they have to be between 142 and 148 the whole week next week, every single day. If they ever stray outside of that, you have enough intrinsic option value in one of the options to sell it for almost $300 or more. And if they have a big moving week and move several dollars, then you can have a much higher return than just making 10% or something. You can make a lot more. And picking these companies that are not supposed to be huge movers, but they don't have to move a lot to make money. And you don't lose a lot of value in these options as it's floating around each day, because you still have one in each direction. So unless they're just sitting on your strike price, if you had the strike price of 145, unless they just sit and just never really migrate away from that for days on end, that's the only way that this $267 you spent on options, that's the only way it decreases substantially. Otherwise, it still kind of hangs around even. If they start migrating away from 145, you get to like 146, 147 on Monday or something, you actually have a little gain with both of them, because the one that's growing in value is starting to appreciate some more premium on top of it. This is a good pick. And so that's what I like seeing, digging through the algorithm, because I would never in my life look at this company that didn't move that much and think that this is a very reliable short-term play to straddle stock. That this is a great number here. What else? We got a 6% here for Sprouts, Farmers Market, but they're really low share price. So numbers will be lower here with lower share prices, but that doesn't mean that they're a great pick. The spread range is not really good either for Sprouts, so that's a no for that reason. Looking for low numbers. The 6. I was going even lower than 5. ConocoPhillips is 6. We want under 5 because those are the best. Devon Energy, $49 share. It's because their options are really, really cheap. That's why. Well, I mean, it is a 4. And it's just saying that, a $2 change in the stock is something that could happen. And that's why that's there. Still not a great number, but a good number. Here's a 3. IBM. IBM showed up last week. It went up this week. Went up, it went up like $4 a share, I think, this week, which definitely cleared the 250 it needed to clear. It once again says IBM is an excellent pick here. Still inexpensive. I did buy an IBM today as well. So I got that one. So we'll watch that again. What else we got? 5% for Occidental, but let's go even. Remember what? Super low numbers. APA, but that's a low share price, so I'm not going to worry about that. Anything down in the 30s is, you're not going to make much profit because they just can't move as much because they're only a $33 a share stock and not 100 something. 10%. That's why if you see a really low number with a high per share stock, that's a really good pick. Kraft Heinz, I do have this. Low share though. It's a really low share price, so that's a reason not to mess around with it. Altria is a 4, only $87, kind of a low share price though. Keep going. So just glancing, looking for anything under, and we can't even sort by this column, unfortunately, unless I create a new table, but I kind of just like browsing as well. We keep going. So we're 300 something through here. Another way to find them, because it's tough to find them in the middle, because the middle are companies that didn't move very much. And so you're getting bad data on a company that doesn't move hardly at all, unfortunately. But that'll change from day to day. I want to see some stuff at the bottom that I know is interesting, because I think Roblox is going to show up there. Roblox is starting to be one of my favorite stocks for this as well. Even though their share price is not that high, they sway a lot. Now, see, it's tough to find stuff that's under 5%. Shows you there's a 6 there, -6. Lucid Group. That's Lucid Motors. That's only, oh yeah, that's because there's somebody asked me to put that in. It's too low. It's only $7 a share. It's too low. Let's see what else we have. For Shopify gets a 4%, only 213 bucks. I keep hearing about Shopify through, the CNBCs or whatever. They keep popping up. $60 a share. It's not that expensive, and I guess they're a sneaky mover. That's why that's showing up there. I did not buy them. It says it's pretty good. What else we got? There's an 8. We'll pass over that. See how rare it really is to find the best, and there's a reason why they are the best. You really want the cream of the crop for this. Here's a 2. eBay. I heard of, yeah, I mentioned this. Is it really only $100 for an eBay option? I'm looking that up. eBay is right now at 43.46. Between, okay, $65 plus $62. It's $120 something basically. So let's see how that changes the number real quick. I'll show you as you update the actual current price and situation that exists as of the close here on Friday. We're gonna do a 526 option, strike price 43.50. It's between $62 and $66, and the other one's between $61 and $64. Actually, so the reason why it's so good is that where'd you go, eBay? It's still at a 4%, and it's 127 bucks now, but they moved 64 cents today. They just have to move, $1.50. And the spread range is pretty good at 5%. The break even's 3%, and they're just inexpensive. So whatever this formula does that gets it down there, it does think that is a very good pick. And it's not expensive. I mean, $1.27 in either direction for a company that's $43 a share is not only is it not out of the realm of possibility for the week, but I would hate to take the other side of that. I would hate to be selling options or something to someone and saying, all right, well, I got to make sure that a stock doesn't move more than like 3 or 4% in one direction. I got to wait the whole week and watch for that to happen. Like, that is a scary way to play it. You're on the other side of that, which is straddling it, hoping that they just move enough to sell one of the options for a profit for the cost of both. And that's how it finds this, that this is probably really likely. Yeah. What else we got? I think I probably glossed over some. Here's a 2. Southwest Airlines, $73 option. Is that right? Let's see. Sometimes when it's a lower price stock and it's hovering around an option price, the option can change in value because it's so close to $1 and it doesn't move that much. But we're going to add this in at a $29 strike price. Between $80 and $83 and $29 and $32 for the put. And what that does is puts them at a 6%. See? So here you go. It's a 6%, but it's okay. Costs you 112 bucks. They probably move more than $1.20. But it's not perfect. See, it's not under 5%. There is a difference when you get down like 2s and 3%. The lowest I've seen is a 2%er. I've not even seen a 1%er yet. I don't know what that would even look like. There's your eBay at 4. Oh yeah, we're back. We just moved around, didn't we? Let's we're gonna sort by something else for a second, just so we can show you the other side of stuff. We're gonna sort this by the biggest losers of the day and the best ones to play if you were going with stocks that went down. Foot Locker is still pretty cheap. They dropped $11 on bad earnings today. They didn't move much later in the day, but next week, will they move to, $2.50 or more so that you can make money? I mean, they did move 11 today. Algorithm says yes, and gives it a 4%. So that's viable. I know they're only $31 a share, so there's not a lot of money to be made in either direction is the problem. This is an abnormal jump, obviously. They'll probably drop or go up a couple more bucks at some point next week because that's just 20%, 25% of what they just did. Like it probably happens, and it's not that expensive. So it does get a rating on there. What else do we have? What is this? Chewy Inc. Low share price, though. I don't know about this, but it's such a low share price, I'm not going to focus on it. How about this? Here we go. Here's a 3% Nike. What's going on with Nike? Let's update that. Nike, we have in here as a $353 purchase. Let's see what it closed at. I know no other way than to update this as we go. Yeah, they dropped 114, 216, and 228 are the call prices. 130, 139 is the put. Let's see where they move to now. Still 357. $220 and one. I feel like I did an update. Just 6%. Whatever. It's pretty good. Still pretty good. So you can see they moved $4 today, and they only need to move $3.50 next week, and they're at 114. So this is pretty good, even though it's a 6%. I think, yeah, I can't remember what it was before I did all that, but that's about right. What else do we have? We got some fours here. Roblox. I didn't want to stop this video until I got to talk about Roblox, and apparently Disney is also on here. Strike price is not 390 Roblox, it's 39. Don't get crazy. I'm gonna update that one real quick, and then I'll talk about Roblox, and then I'll kind of end the video for today, because that's about all the companies I think I wanted to talk about that looked really interesting, because you got to use that rating system. So at $40 strike price, 105, 110, and 100 and 104. Extremely tight spread margins for Roblox. Yeah, they moved up, of course. They're a 5. They're a 5, and they're a lower price share and only about 40. But man, do they move? Like, are they going to move $2 next week? Boy, I would not like to take the other side of that. Like, are they going to move more than $3 next week? Like, are they going to oscillate between 37 and 43? But are they going to get there? Probably. Like they're really good at moving. And so it shows up as a 5. It's only, it's not bad. They were down, I think, $3 or more today, and then made a comeback of a few percent. They are just a mover. They're great for straddling. Walt Disney, apparently. I haven't looked into it though. Here's a 2, Morgan Stanley. Morgan Stanley, what happened? You're $82 a share. You're only $256 for your option. That's why. MS. $82 a share. Like, they almost moved it today. This is, I mean, to see a 2, I was going to end after Roblox, but there's a 2 on here. We have to discuss if there's a 2. We're going to double check options prices right now just to see if that stays as a 2 percentage. This is the work that goes into this. At 82, 130, 137, 99, and 104. So it's showing up as having a really good number because it's inexpensive. Yep. It is only $235. Yeah, it's now a 3. So it moved from a 2 to a 3, but it's still pretty darn good. pretty darn good there. Spread range is good at 5%. The break even is under 3. All these things are saying go for it. So that's one. Did not buy that one today, but that is one. Anything else? There's a 5 with Coinbase. Oh boy. I'm not paying $400 for anything related to Coinbase. Let's see here. Anything else before? Oh, there's a 2 again. Starbucks. Starbucks popping up as a 2. We're going to do an update because why not? Got to get accurate because you can try to get this on Monday morning. And this is where it closed. So it's a good way to do analysis because you are, frozen and you don't have to worry about things moving on you from day to day. You have the weekend. Wait and see what it's going to be on Monday. Oops, nope. Starbucks, not the Bucks. They are currently at 105 now, 145, 153, 86, and 90. Tight spreads. They're a 4, okay, but they are a 4, and that's still really good. 237. They moved 158 today. They're $105 a share. Things can move. That's really good. Goldman Sachs right below it at a 5. And that seems to be about the best we're going to do. So in summary, straddling stock options. Straddling, this has given you a leg up for sure. I mean, the amount of research it would take to go into try to even explain to general AI what I'm trying to do with this, like just to explain it to a person to go and research all these companies and watch movements and grab all these bits of information to give you this would take forever. This is doing enough to at least give you a leg up on finding stuff, acting on it, and then sitting back and watching the market in a more passive manner where you're just like, all right, well, Monday will come around and you'll have a bunch of companies that will look like really good deals on here. Something's going to go up and something's going to go down. Like it's inevitable something's going to move. And as it does, you just start picking off the companies that you're profitable and taking profits. And it becomes a week of just profits developing. And you don't have that feeling about, oh, I own a bunch of shares in one stock. And if that stock goes down, I have a really bad week. It doesn't work like that when you're straddling. It's, oh, did your company go down a lot this week? Oh, well, you have a put on them. And so you made a bunch of money if they went down a lot, disproportionately to what people thought they were going to go down. If you buy this Foot Locker and then more people hear about Foot Locker, they drop another like $7 a share tomorrow or something, you can make $500. That's what could happen. So it's kind of like you're sitting back and you're watching that develop, and it's just a really enjoyable way to monitor the volatility that is the market, because that's how you can take both sides and bank profit whenever there's movement, which that's what the market does, it moves. So anyway, I'm really happy with this rating rank number. I expect excellent things out of it because it's taking into account a proportion of all the factors. Some crazy formula in here. See this? It's nutty formula, like a bunch of ifs and things got to be greater than 1 and dividing by 100. I don't know what I did there, but it works well because it's doing exactly what I wanted to do, which is isolate those companies that I would gloss over the list more if I didn't look over here. And I know this is doing what my brain wants to do to organize the strength of this. Like, we're not done yet. We're doing more video. Let's talk about companies that moved the most, for example, today. All right. They have a number over here. So the algorithm is basically saying, hey, this company moved a lot today, but don't buy them. Like there's reasons not to buy this company. And one being super expensive. Let me explain what this is such a huge number when it comes to options. Like this number, let's sort our costs of what things actually cost, right? The most expensive option out there as of when I updated this, I'm sure it slightly changes, is like almost 12 grand for AutoZone, right? Um, because they've been moving so much. This is such a huge variance. This is $120 of change. So they got to go to either 27, 2770 or 2500 or something for you to make any money from this 2640 that they are currently at. They have to move a lot. So this is a huge risk on a short-term option, because what if they do have a week where they hardly move? They go up one day, down next day, up one day, they bounce around. You could lose potentially the greater majority of this $12,000 depending on where they finish. If they stuck right at 2640, you'd lose everything. So this is super risky for short term. And I like that the algorithm properly picks off, don't do this. Like this is scary to try to do this stuff. So there's 10,000, there's 9,000, there's huge ones, right? Well, is there ever this is number ever good for any company? And also, who are these companies? These are really high share price companies. I mean, that's why they're moving so much, but not all of them. Eventually, when we start going down here, 78, 40, we want that number to be under 10%. The 13, Adobe, $1,000 though, so you get a $10 share variance around 360 or something. But you're starting to get to something almost reasonable. If you really wanted to throw down $1,000, it would be a little more than 1,000 apparently on Adobe, but that's not below 10%. Let's keep going, try to find something below 10%. Well, MasterCard, close. 11, Tesla. Interesting. Okay, I haven't looked at Tesla in a while. Let's do an update of Tesla's options real quick. I know it's a long video, but this is the thought process of what's going on here is, I would argue this is a way of actively investing where you don't really lose your shirt. You just make smart picks and you're like scraping away at profit and sometimes hitting pretty big profit on certain companies. This is a fun way to do this. And I'm really happy with how this has been going. I mean, it looks like I made about 20% overall, I think. I was trying to run it all today on all these straddles that I did this week. It was like all over $500-600, something like that, is about what I put into it. And that's what I think I made, but I have a ton of stuff still open. I'm not even including that yet. So we'll have to do this from week to week, but I left a lot of money on the table with certain companies this week where I sold it too soon and they just kept going up. So there's a lot to learn about when to sell and how much profit to take. 180. Whoa, Tesla made a move to 180, did it? Oh boy. 425, 430, 390, 400. Did not have any Tesla, wasn't paying attention. So let's look and see what happened here. So basically, Tesla's number is now 17%. So it's raised up because this got more expensive, but they are a mover and a shaker sometimes. They only went up by $3, so they must have gone up on Thursday. I wasn't paying attention. So the number is not that great, and this is still expensive. Okay. Still looking for the best number when it comes to companies that went up, trying to get one under 10%. Because these are the way that you find the companies that you want for different reasons. This would be one where if you could find one under 10% here, it's going to be one that, here we go. AMD, ha, 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 ha. How have I not mentioned them in this video yet? They were probably the best company to do the straddle strategy on this week of all the predictable companies, especially over the last few weeks. I wish I had started straddling companies more than just a week or two ago, because they've been excellent. They're an 8. Yep, they're not that bad for how much they move and how much volume they have. I mean, look at their volume here in this pivot. Yeah, 67 million shares, I think, sold today right there. Like, look at that huge number. when you look at companies just by volume, they're just keep showing up on the top. And then I got something else I want to talk about before we end this podcast. Lots to talk about. I'm really happy because this is just math that's working out. Where are they? AMD is right here. Basically, by number of shares, they're like the 7th highest today. Tesla's up there. Palantir keeps getting jammed. I noticed that, but they're low share price. Low share price here. Yeah, you can see when it comes to companies, Apple traded a ton, didn't move very much though. Amazon's been going up. I remember Amazon was at 103 a few weeks ago. They just keep going up. So that seems like it would be a good one. Let's actually look at what Amazon shows up at, what number they have in the big pivot. The options pivot. Nope, nope. Amazon, nope. Amazon. Yeah. Computer slow, we're doing so much. Amazon comes in at a 9%, so it's under 10, $400-ish. Spread range is great. Share price is now going up. So they're not bad. But the one I want to end on is Microsoft. And the reason why is I wanted to grab the number for this. Wow, it's showing up as a negative 100%. No way. No way. Let's find out if that's true. I was going to say this is going to be a really good pick, and it might be a good pick this week because they're having an AI like developer conference for a few days, and they're going to be showcasing some amazing stuff. AI is still a buzzword that means something. 365, 385, 255, 264 at a 317.50 strike price. Now, the reason why I want to talk about them is so when there's supposed to be news about a company, it raises the cost of the option. Okay. And it's saying that spread range is good. Break even's only 2%. Why is it? Oh, because they only moved 18 cents today. That's why. All right. So this is one of these things where I want to show you if they had a normal day where they move like $1.50 or $3. Let me show you what that does. Because today they only have 18 cents. Let's say they move $1.79 or something. At $1.79. Let's say they had moved that way. Watch what happens here. See how this number just changed to 19%? So we're taking into account the current day's change when we're ranking these companies. Microsoft will not have a day where they hardly move like that every day. And so it's going to be more important to catch them on a more reasonable day. So as you update this algorithm in real time, companies will have weird numbers here sometimes if they haven't moved much today. And that's something to pay attention to. It doesn't mean that they're a really bad pick. It means they're an abnormally bad pick today, but it doesn't mean that they're necessarily a bad pick overall. And so I think Microsoft is also a pretty good pick there, actually. You can see that if they had moved a couple bucks today, that would have looked a lot better. I hope I communicated that properly, because that's really what's going on. Anyway, it's been a super long video, but I just felt like sharing, because if you have some money that you want to put into the market and you want to actively like take advantage of all these trading opportunities that are out there, like you've never had the ability to like get information and make spot on buy the second trades, put orders in online and do all that. If you want to pay attention to it, there's absolutely money to be made in opportunity in this option market, because you can just search for deals and those deals turn into profit as companies move. And even when they don't move very much, you're still left with value in your options to some extent. So it's not an all or nothing thing where what you buy is worthless at the end of the week. It's going to maintain some type of value. And with any attention paid to it, you can minimize your losses on companies that don't move enough. And then the trick is going to be maximizing profits on companies that do move a lot. And I think that what I'm going to talk about in the videos upcoming next week is I now know how to pick the companies out of this. So now we just have to understand, all right, well, at what point do we take a profit? That is going to involve how much they are up at a certain point and how much time is left on the option. That's really the biggest factor there. So these are extremely short-term options that are only a week. I wanted to test this strategy out in the worst condition possible and most difficult to make money, which arguably is the shortest time period. And the shortest option periods always end on Fridays, and they're weeklies in many instances. So I was like, well, let's try this with just weeklies because we're going to be able to run more samples and see if this will actually work on a 5-day or less time scale sometimes, 7, 6, 5 days, depending on when you buy the option. If it works under those constraints, then it makes it even easier for it to work on longer periods of time because you'll have a better idea about when to sell things. And so, all right, so what we'll be talking about going forward is, yeah, when do you sell? Well, if it's Monday and you've purchased one of these options, like you purchased Twilio, it's Monday and they move by a couple bucks and you can bank like 10% on your investment. You could sell this for like 280 or 90 bucks or something like that. Do you do that? There's an argument for yes, because you're like, all right, well, it's day one and I can already guarantee myself 10% overall on this transaction. That's a great return for a week. If all my purchases were Twilio and I put, $26,000 on Twilio or whatever, and I could turn around and sell it the next day for $29,000, right? Or something like that, which is what you could do if you put a lot in there. Let's call it 2,600 bucks turns into 2,900 bucks, right? After one day, you're like, wow, that's a pretty good return. I would probably take that every day if I could just take 10% every day, make a living, right? Not a problem. Well, that's one way to look at it. There's another way to look at it, which is, well, wait a minute, it's only day one. And they just moved in a direction. And if they continue moving in that direction, all of a sudden, instead of taking 10%, all of a sudden you're taking 100% maybe on Tuesday if they go up again, or over the next couple of days if they migrate even more. There's something about owning and the time that has value that you own the option for that matters. So I don't know the answer to that question yet about when to sell at what profit. I'm sure there's a formula that I'll eventually try to come up with, and it'll go something like, I know there's one, which is if you're up 100% in the first day, you sell. I've always said that. I go, if you double your money in one day, you sell. Like, I don't care how great you think it's supposed to be tomorrow. If you just made 100% in one day, you just sell. Like that's the way I look at it. So I'm sure that is the first rule, because I've always liked that rule and it makes a lot of sense. Like if you double your money every day, you're going to hit infinity pretty fast. So if you double something, you sell. Fine. Well, what about if it's Tuesday or Wednesday and you're up like 30% on something? Because the option expires on Friday. That I don't know the answer to. That I know that the cautious investor that wants to feel like they've made pretty good decisions and won't regret it too much is the one that usually sells, especially on a Wednesday. Like I think that Wednesdays are going to be pivotal days when we're talking about 1 week options. Eventually I'm going to buy longer options for months at least. And the monthly ones, it will be a much more interesting exercise. But I'm still testing everything in the weeklies, because if we keep hitting companies on weeklies, wow, this is fabulous. Because I love this number over here that's telling us to stay away from landmines, and it's picking stuff with great value, and it just screams good times. So anyway, I recommend Roblox for next week. eBay apparently was on there for a reason. That's what the algorithm said was, I think, one of the best ranking ones. There's a lot of stuff I talked about, but it's a fun way to invest for now, and we're just going to keep doing it and see how it goes. So I hope your week worked out well. I hope you profited, and I hope your profits continue in the future. Good luck. May all your trades be winning.